Hello, everyone, and welcome to the Daily Morning Podcast. So, let's begin with the Indian market closing of yesterday. The benchmark indices yesterday closed sharply lower for the fifth consecutive session to end at 2 months low. Nifty 50 broke the key psychological level of 22,000 by dipping around 345 basis points. So, overall, Nifty was down by 1.6% and Sensex was down by 1.5% in yesterday's trade. The broader markets also saw steep declines and witnessed selling across the sectors. The mid and small cap indices have underperformed the benchmarks also with deep divergence as advanced decline ratio was mostly in the favor of declines. So Nifty mid cap 100 was down by 1.9% while Nifty small cap 100 was down by 2.8% at close. Some of the top gainers on NSE yesterday were Hero Motocorps, Tata Motors, SBI, Infosys, HCL Tech, Mahindra & Mahindra. While the top losers on NSE were BPCL, L&T, Asian Paints, JSW Steel, DV Slab, ONGC, ITC. Taking a check on the sectoral performance of BSE, then BSE Oil and Gas and Metals were the top losers on BSE, closing with declines of more than 3%. So BSE Oil and Gas Index was down by 3.4% and BSE Metal Index was down by 3.1%. BSE Power, Realty and Services Indices also saw declines of more than 2%. While BSE Healthcare, Telecommunication and Financial Services saw declines of more than 1% each. Only the BSE Auto Index was closed on a positive note on BSE with gains of 0.6%. So there were about 73 stocks on BSE which made 52-week highs, which included names like Crompton, Avenue Supermarts, Eicher Motors, Hindustan Motors, Just Engineering, Polycab, Sterling and Wilson Renewable Energy Limited, etc. And there were 29 stocks that made 52-week lows, which included companies like Asian Paints, Bata India, Dalmia Bharat, Ramco Cement, Tata Tech, etc. Looking at the overall market breadth on BSE, then there were about 843 stocks that advanced, and against them, 2,998 stocks declined. On the fund flow side, FIIs have continued to remain net sellers with net selling figure of 6,995 crore rupees. And DIIs continue to remain net buyers with net buying figure of 5,643 crore rupees. Now, taking a look into the global market cues for today's India market opening, the US market has closed on a positive note for 7th consecutive session, led by favorable weekly jobless claim data, which came in at 2.31 lakhs against the expectations of 2.15 lakh. So that has raised the hopes of rate cuts in this year of 2024 itself. And all the US indices have ended in green, gaining between 0.3 to 0.9%. The Asian markets are also currently trading on a positive note, and although that can lead to a somewhat positive start for Indian market, but because of the volatility and the ongoing result season, the direction of the market may change during the day's session. Now moving on to the key corporate earnings released yesterday. First one is BPCL. The company's standalone revenue has grown 1.6% on a sequential basis at rupees 1.16 lakh crore rupees. EBITDA is up 47.9% quarter on quarter, and net profit is up by 24.3% quarter on quarter. EBITDA margin is also up to 51 basis points on a sequential basis at 7.9%. So overall, the numbers are look decent on a sequential basis, but the figures are weaker than expectations. So the reaction on the stock price can be muted. About India also announced its numbers. Revenue of the company has gone up 7.1% year on year. EBITDA and net profit are up by 17.7% and 24% year on year respectively. EBITDA margin has increased 205 basis points year on year to 22.9%. So strong set of numbers by About India. Relaxo Footwears have reported weaker set of numbers. The revenue of the company has gone down 2.3% year on year. EBITDA is marginally up by 2.1% year on year. Net profit is down by 3% year on year at Rs 61 crores. The margins of the company has slightly expanded to 16.1% from 15.4% in the corresponding quarter of last year. So the numbers are weaker and slightly on the muted note. So the reaction on the stock price can be neutral to slightly negative. Intellect Design Arena has also reported its March quarter numbers. The consolidated revenue of the company is down by 3.3% quarter on quarter. Earnings before interest and tax is up by 4.7% quarter on quarter, and the margins are also up 124 basis points quarter on quarter at 16.5%. Net profit has gone down 13.6% on a sequential basis. So overall weak performance, and the reaction on the stock can be neutral to slightly negative. Mahanagar Gas consolidated revenue has grown 2.8% on a sequential basis. EBITDA and net profit are, however, down by 11.9% and 20.5% quarter on quarter, respectively. Margins have also gone down 410 basis points quarter on quarter to 24.5%. So lower than expected numbers from Mahanagar Gas. So the reaction on the stock price can be muted to slightly negative. Hikal Limited, the company's revenue has gone down 5.7% year on year at rupees 514 crores. EBITDA is up by 7.3% year on year, while net profit is down 5.6% year on year. The EBITDA margin is also up to 33 basis points year on year at 18.4%. So mixed performance, and the reaction on Hikal Limited can be neutral in short term. VST Tillers and Tractors consolidated revenue has gone down 15.3% year on year at rupees 273 crores. EBITDA and net profit are down by 15.3% and 13.4% year on year, respectively. And the EBITDA margin has contracted to 34 basis points year on year at 14.6%. So weak performance by VST Tillers and Tractors. Some companies which will be announcing their quarterly numbers in today's day are Tata Motors, Eicher Motors, Cipla, Bank of Baroda, ABB India, Union Bank of India, Polycab, Thermax, Kalyan Jewellers, Aarti Industries, Dr. Lal Pathlabs, Piramal Pharma, Finolex Industries, Sapphire Foods, Sirma SGS Technology, and many other key earnings are going to be declared today. So one can also focus on those stocks. Now, some other stocks which are in focus due to the news are, first one is 197 Communications, that is Paytm. The company has refused media reports on its lending partners invoking loan guarantees due to repayment defaults. The company acts as a distributor of loans and does not provide a first loss default guarantee or other loan guarantees to its lending partners. So the reaction on the stock can be neutral to slightly positive. Brigade Enterprises will develop a residential project in Bengaluru with a gross development value of rupees 660 crore rupees. So that's positive for Brigade Enterprises in short to medium term. Adani Enterprises Mauritius-based arm, that is Adani Global, has acquired a 49% stake in UAE-based Sirius Digitech for $24,500. So positive for Adani Enterprises in medium to long term. Shyam Metallic stainless steel sales in the month of April were at 6,886 per ton, which is up 33.7% from the previous year. Aluminium foil sales has also went up 22% year on year at 1,338 metric tons, and pellet sales were at 50,557 metric tons, which is down 62.2% on year. But overall, the updates are positive from Shyam Metallics. Tata Steel has increased its stake in the arm of Indian Steel and Wire to 98.6%, so neutral for Tata Steel. Life Insurance Corporation has received a GST interest and penalty order worth rupees 127 crores, including interest of rupees 114 crore rupees. So it can be slightly negative for LIC in short term. Also, Solara Active will raise rupees 450 crores via rights issue, so that will be positive for Solara Active in short to medium term. Now moving on to some of the other data points like bulk and block deals. So in case of Nilkamal Limited, there is a bulk deal where Sitha Kumar has bought 0.78 lakh shares, which is 0.52% of the stake at rupees 1,870.2 per share. Also on the corporate action front, today is the ex or record date for dividend of Aptech, HDFC Bank, Transformers and Rectifiers, Bank of Maharashtra, Ramkrishna Forgings, UCO Bank and DCB Bank. So these were the key market data points to go ahead for the today's trading session. This was all about the daily morning podcast. Thank you everyone for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.